trades and gains. Yes, I did get a haircut, so go ahead and hide your moms. Just kidding. Anyways, I'm your host, Max Pitts, where we cut through the noise like Powell through a rate hike. And today, it's not just markets that blew up, it's the Middle East. Markets plunged, oil exploded, whales ran for gold like it's 2008 all over again, or whenever the gold rush happened. And somehow, Trump thinks war is good for your portfolio. Okay, buckle up, because we've got geopolitical chaos, whale-sized trades, and market tape that looks like a Jackson Pollock painting. Let's go ahead, make like some butt cheeks, and dive straight into it. So, today, the Dow dropped nearly 800 points. Damn. Worst day in months. The S&P 500 broke below 6,000, down 1.13%. And the NASDAQ fell 1%. Tech was dragged down with the rest. Now, why did this happen? Israel launched a preemptive strike on Iran's nuclear sites. Iran responded with missile salvos. The IDF literally posted, all of Israel is under fire on X. This isn't macro noise. This is full-blown global risk. Now, what happened here? Crude oil spiked 13% overnight, settled up at 8% though. Gold shot up to $3,450 an ounce, near record highs. Bitcoin dumped. Safe haven my ass. And President Trump on Truth Social saying the attack might be great for markets because Iran won't get nukes. Classic. Did we really expect more? Now, let's go ahead and talk about our winners and losers. So winners, gold, GLD, gold ETF, up as whales go all in. More on that in a sec, by the way. Energy sector, XLE's up 1% on oil surge. And RH, Restoration Hardware, surprise profit sends the stock up 7%. Now losers, we had airlines. Fuel cost surge equals United down 5%. DAL down 4.8%, and American down 4.3%. We saw Adobe, great earnings, still down 5%. Is AI just getting worn out? Kind of like Bonnie Blue? Who knows? Visa, down 5%. On fears Walmart and Amazon might launch stablecoins. Yeah, that's real. And SPY, put volume absolutely surged here. Defensive sectors like staples, healthcare, and gold are catching major inflows. The translation here, big money is a shaking in they boots, baby. Now let's go ahead and switch gears here and go over to our favorite options flow software, and where I'm ironically enough the lead analyst, Investor Central Club, baby. By the way, if you want this flow for yourself so you don't have to depend on me reading it to you, well, use the code 130. You can get your first month for only 70% off. That's only $30. And we are ending it soon, and we will never bring it back. So make sure you take advantage, okay? But let's talk tape. Whales weren't playing today. They made some statements. GLD, we saw 127 million in call flow. Blocks flying in at $310, $315, and $320. The context here, inflation hedge? No, this is a war hedge. SPY, we saw 45 million in inflow. 34 million of that went into puts. An example of this were the 572Ps with an average of 563 a contract, 7,137 contracts. That's not hedging, that's bracing for impact, folks. We also saw coin with 2.8 million on the December 2027 140 puts. 1,000 contracts on the block. Someone thinks crypto's in trouble long term. And NVIDIA, we saw 390K in short-term puts post-split. Smart money might be trimming exposure after AI melts up. Dark pool prints, we saw Tesla with 162 million, United Healthcare with 238 million, SPY with 151 million, but it's massive movements underneath the filter. And our most shocking was CAPR, a biotech IV explosion, $1.55 million bet on the $7.50 put with with 255% IV. That's not a lotto ticket. That's a we know something play. Now look, this market isn't in panic mode, but it's not comfy either. Here's the deal. Oil up equals inflation risk back on the menu. Gold up equals a war hedge. And airlines down equals real world impact of crude. SPY puts and dark pool flows, institutions are moving money fast. FOMC is next week, and it is now 10 times more important. If Powell blinks, markets rally. If he stays data dependent, well, go ahead and strap in and just don't look at your portfolio. Trump's tweeting tariffs and nuclear threats in the same breath. The Fed might be the least volatile character in this whole saga. Now that's your wrap for June 13th. Enjoy your Friday the 13th if I've ever seen one. What's your take? War rally or fear sell-off? Buying gold or fading the oil spike? Or is this just all election year chaos? Drop a comment below. Subscribe for daily macro plus tape breakdowns, and want flow before it hits Twitter? Join us on Substack or on Investor Central Club. Link in the descriptions, baby. Stay sharp, stay cynical, and don't forget to always follow the flow, my loves. Peace.